Good afternoon. Our topic for today is impairment of receivables together with receivable financing. So when we start first with the discussion of your impairment of receivables. So for impairment of receivables, this means that your receivables will not be collected in full already. So the future cash flows that is based on the contractual right will not be received in full. Therefore, there is an impairment. When we say impairment, it means that the amount of the cash flows again is not to be collected in full. Okay, so now regarding receivables, we said we have AR, we have NR, and we have LR. So how do we impair your accounts receivable again? We impair your accounts receivable through the use of your allowance for doubtful accounts. So we have your AFDA and your different methods of estimating doubtful accounts. And normally, it is considered really impaired if there is a write-off. Now, for your notes receivable, how do we consider your notes receivable as impaired? So when do we say that we cannot collect the amount of our notes receivable? So generally, a note receivable contains a due date. What if at the date that the notes is due, we cannot collect the note? So at the date the note is due, we cannot collect the note. What will happen? So there is now an impossibility of collection. So what will we do? There is now we call a dishonored note. So if at the date the note is not collected, we call the note as dishonored note. While for AR, we call it doubtful accounts, diba? Doubtful accounts. Sa NR naman, ang tawag natin sa kanya ay dishonored note. Ano namang mangyayari pagka dishonored yung ating notes? Pag dishonored yung ating notes, hindi natin siya i-write off as loss as compared to AR. Pagka total dishonored kasi siya ng AR or total doubtful siya, hindi mo na makokolekta. Ang gagawin natin sa AR, di ba, i-write off natin. Pero sa NR, anong gagawin natin? I-write off din ba natin or tatanggalin ba natin yung NR? The answer is no. The dishonored note will be reclassified as part of AR. It will be reclassified as part of AR. Sir, why is it as part of AR? Because guys, the NR now is already dishonored, meaning it is past its due date. So meaning, if you present the note, you cannot present the note already as it is that you can collect at that particular date kasi nga, past na its due date. So since there is now no security or there's no evidence as to the particular borrowing, ang gagawin natin doon, although initially there is an evidence because of the notes, but because, again, it is now dishonored, it will become an open account. So pagka mangongolekta ka, it is not because of the note already. So the reason still the note, pero hindi na through the note kasi nga dishonored na siya past its due date. Therefore, you will collect based on it being an account kasi may obligation pa rin siya sa'yo na hindi settled. So ang gagawin natin, yung NR, hindi natin siya tatanggalin. We will only reclassify it as part of AR. So we debit AR, we credit NR. We debit AR, we credit NR. That's how we impair the notes receivable in case it is dishonored because we did not collect it at its due date. How about a loan receivable? So under the loan receivable, dito tayo mas magkakaroon ng problema because unlike the other two receivables, it will be easier to record the impairment for AR and NR. Doubtful accounts only and a dishonor of the note. While for LR, the problem is we need to estimate the cash flows. Estimate the cash flows based on the loan. So what cash flows do we need to estimate? We need to estimate the cash flows both for the principal and for the interest. We need to estimate the cash flows both for the principal and for the interest. Now, our problem for LR is that in case there is an impairment, what should we apply? What should we apply? So under LR, we have two impairment models. The impairment model under PAS 39 and the impairment model under PFRS 9. The impairment model in your PAS 39 and impairment model under PAS PFRS 9. So what is the impairment model under PAS 39? The impairment model under PAS 39 is known as your incurred loss model. Incurred loss model. So incurred loss model, why do we say that it is incurred loss? So in this model, we say it is an incurred loss because we assume or we only recognize impairment. Impairment is only recognized upon evidence is identified that the loan is impaired. So only upon this evidence that there is already an identified evidence that we write down the LR at realizable value. Okay, so under incurred loss model, impairment is only recognized upon evidence is identified that the loan is impaired, Okay, so we write down the loans receivable at realizable value. So what do we mean again when we say upon evidence is identified? So we mean that we only recognize loss. Loss is only recognized upon happening of the loss. So kung kailan nangyari yung loss, dun lang tayo magre-recognize ng loss or impairment loss. Kaya nga siya tinawag na incurred loss model. You will only recognize the loss once it is incurred. And it is incurred at the happening of the loss. So we try to write down it at the realizable value. How about under PFRS 9? Under PFRS 9, we use the so-called expected credit loss. Okay? We use the so-called expected credit loss. So what is your expected credit loss? So the loss is already expected based on all possible default as early as the date of issue. Okay? So under PAS 39, tandaan ninyo, incurred loss siya kasi saka lang natin i-recognize yung impairment pagka nangyari yung loss. Pero sa expected credit loss, ang gagawin natin, we already expect the loss. Since we expect the loss, kailan ba natin siya expect? We expect the loss as early as the date of issue. Normally, it is the weighted average credit losses based on probability of default. So dito, magigets ninyo mamaya sa mga, baka nabasa nyo na rin to, or napapansin nyo dun sa textbook, meron tayong tinatawag na probability of default. Probability of default. So sir, ano ba yung gamit ng probability of default dyan sa expected credit loss natin? So tong ECL kasi natin, wini-weight natin, ECL, the expected credit loss, is weighted based on the average credit losses with probability of default. Okay, so in short, our ECL is computed based on the weight of the probability of default, So unlike in your PAS 39, we just compare the carrying amount to the recoverable amount that is already the amount of our impairment loss. However, under your ECL, we also have your lifetime ECL, or at the beginning ECL. So whatever ECL is that, we use a probability of default. Why, sir? Because again, here we only expect the loss. In incurred loss, meron na yung loss. In expected credit loss, ine-expect pa lang natin yung loss. So parang para siyang allowance na initially nagbibigay ka na ng amount na baka hindi mo makolekta to. Okay. Now, in your ECL again, we use a probability of default as a weight, So unlike in your past 39, again, as I said before, it is only based on your carrying amount less recoverable amount. In your expected credit loss model, we have your carrying amount less recoverable amount multiplied by probability of default. Why? Because again, in your ECL, we weight the credit loss based on probability of default. So we need to weight the amount of loss computed that is already expected based on the future cash flows of the entity over the loan multiplied by the weight of the probability of default. Kaya nga guys, pagka nabasa ninyo yung handout na binigay ko, pagka i-compare lang natin ang past 39 sa PFRS 9, dapat ang magiging formula nyo lang talaga is carrying amount less recoverable amount. That's for past 39. This is known as your impairment loss. In your PFRS 9, take note, you are expecting here. You are expecting. Since this is an expectation of the future losses, more so, we only use here an allowance. We only use an allowance. Therefore, in your PFRS 9, you have your recurring amount less recoverable amount multiplied by your probability of default. What we get here is not the amount of impairment loss. We get the allowance for impairment loss ending balance. Okay. So what now is the use of using a PFRS 9 rather than PAS 39? In your PAS 39, again, we can only make use of this, guys, if ever the problem does not state probability of default. Okay, guys, pagka nakakita kayo ng problem sa mga sinusolve ninyong textbooks, tas nakita ninyong walang probability of default, ay past 39 to. Kung ano yung makukuha nyong amount, yun yung impairment loss. Nasundan? Pero pag nakakita kayo ng problem na may weight of probability of default, then you use PFRS 9. Ibig sabihin yan, PFRS 9 ang ginagamit natin. At since PFRS 9 ang ginagamit natin, kailangan ang makukuha natin AFIL. Nasundan? So pagka guys, ingat kayo please pagka tinanong what is the amount of allowance for impairment loss. Dito kasi sa past 39, pwede natin siyang outright method or allowance method. So under outright method kasi ang gagawin natin, impairment loss debit, and then we credit the loan receivable, including any interest receivable that is already impaired. Next, under allowance method, ang ginagawa natin, debit, impairment loss, credit, allowance for impairment loss, tapos credit, interest receivable. Here, under past 39, two parts yung ating impairment loss. Why is it two parts? Because it is attributable to the interest and to the loan itself. Okay. Pag tinanong, what is the total impairment loss? Ito siya. Yun yung sagot ninyo. Kung magkano yung dinebit yung amount, yun siya. Pero, pagka ang tinanong guys is, how much is the impairment loss attributable to the loan? Yun yung nakabawas sa loan receivable o yung AFIL ninyo. So, ito yan. Yan siya. Ayan. Yan yung loan itself. Wait, kulayan natin. Ayan. Yung loan itself, yan yung amount attributable on the impairment loss to the loan. Okay? Masundan? Okay, ulitin natin. Balik tayo sa past 39. So, under past 39, Carrying amount less recoverable amount may impairment loss. Ngayon, pagka-compute natin sa impairment loss, dalawa kasi yung pwede natin gawin, outright or allowance. Pero take note guys, pagka past 39 yan, yan agad yung ating impairment loss whatsoever. Okay? So kung may impair ulit siya, dagdag yan ng impairment loss. Clear? Okay. So every time we impair, we just increase the impairment loss. Nasusundan. Okay. Dito kasi, sa past 39, panay impairment loss lang ang mako-compute. Sa PFRS 9, ang mako-compute naman, ending AFIL, allowance for impairment loss. So, mamaya makikita ninyo based on our examples. Okay, so under your impairment loss, we can record it as outright or allowance. So under outright, we debit impairment loss, we credit loans receivable, we credit interest receivable. So why is it called outright? It is called outright because directly we deduct the impairment to the items of the impairment loss. And what are the items of the impairment loss? It is attributable to interest and loan itself. So if ever there is an impairment loss to the interest, then you credit it. To the loan itself, you credit it. But guys, ito ang technique dito. The interest on loan is always 100% impaired. 100% impaired. So kumbaga, let's say 5 million, 10%. Ang interest niyan is 500,000, di ba? Tapos pag nakakompute ka ng impairment loss na 900,000, ibig sabihin yan, yung buong impairment ng interest, buo yung impairment ng interest, 500,000. So yung natitira, yun lang yung kay loan, 400,000. Ganun siya actually. Ganun siya. So pagka na-gets ninyo na dalawa talaga yung part ng ating impairment loss, madali ninyong malalaman kung magkano ba talaga yung impairment as to the interest and as to the loan. Para pag gumawa kayo ng journal entries, mas madali na siya. Okay? So again, outright kasi directly kay loan receivable siya at kay interest receivable siya. Tapos, allowance, credit AFIL, credit interest receivable. Bakit AFIL? Kasi nga allowance method na yung ginagamit natin dito. Allowance method natin yung ginagamit dito. Guys, take note ha, saka lang natin gagamitin na 100% yung ating interest in case the amount of our impairment loss exceeds our amount of interest. And with all the problems that I encountered with financial accounting, I never seen a problem that the amount of impairment loss is lesser than the amount of the interest. It is always more than the amount of the interest. It is always more than the amount of the interest. Okay? So, ayan na, ingat tayo dito sa ating past 39. Kailan uli natin gagamitin yung past 39? Gagamitin natin siya pagka yung problem, nakita ninyo walang probability of default. Okay? So, pag walang mention na there is a probability of default, past 39. We go to your PFRS 9. So under PFRS 9, we use your allowance method. So this is based on your expectancy that there is a future amount of loss. So how do we compute under PFRS 9? That is your carrying amount less recoverable amount multiplied by probability of default. Okay, so guys here, if ever the problem has probability of default, PFRS 9. Whatever amount you compute here is the amount of our AFIL. Whatever amount you compute here is the amount of our AFIL. Okay? Okay? So, okay, there's a chat. Wait. Now, after knowing the difference between past 39 and PFRS 9, we go now to the items of our formula. So the items of our formula is carrying amount, recoverable amount. Okay. So it is when the carrying amount is greater than the recoverable amount that there is an impairment. It is when that the carrying amount is greater than the recoverable amount that there is an impairment. So what is the carrying amount? What is the carrying amount? Carrying amount in impairment of loans is equal to the book value of the loan. Book value of the loan. This is equal to the face amount of the loan plus any premium on loans less any discount on loans. Okay, so that's the amount of our book value of loan. Carrying amount of the loan is equal to your book value of the loan plus any interest receivable. Interest receivable. Okay, so again, carrying amount of the loan is equal to your book value of the loan plus interest receivable. What is this interest receivable? This is the accrued interest over the loan. Accrued interest over the loan. How about the book value of the loan? The book value of the loan is equal to your face amount plus or minus the premium or discount on the loans. How about your recoverable amount? Your recoverable amount is equal to the present value of future cash flows, discounted at original effective interest rate. Discounted at original effective interest rate. Okay, so again, in our formula, we have the first two items, carrying amount and recoverable amount. So carrying amount is greater than the recoverable amount, we have an impairment. So what consists your carrying amount? Your carrying amount consists of book value of the loan plus interest receivable, while recoverable amount is equal to your present value of future cash flows discounted at original effective interest rate. Take note, guys, this is the original effective interest rate. Sir, what if the problem does not provide for MIR? If there is no original effective interest rate. So hindi niya sinabi na may market interest rate or effective interest rate siya or may yield rate siya at the time of the issuance of the loan. You assume that the effective interest rate here is equal to your nominal rate or the stated rate. Okay? Again, guys, if ever the problem does not give you the effective interest rate at the time of issuance, kaya nga siya original. Kasi yan yung ating effective interest rate at the time of issuance. At the time of issuance. So, here, if ever wala or hindi nyo mahanap sa problem yung original effective interest rate at the time of issuance, you assume that the effective interest rate is equal to your nominal rate or the stated rate. It is equal to your nominal rate or the stated rate. Are we clear, guys? So again, guys, if ever we compute your impairment based on this carrying amount and recoverable amount. Okay, let's have an example. Bearing an interest of to yield 12%. At the end of year one, ABC company is having trouble meeting its obligations. Further, ABC failed to pay the interest on the loan during the year. During the year. Okay. So assume this is January 1, year 1. Huh? Okay. So on January 1, year 1, issued a 5 million 3-year loan to ABC company bearing an interest of 10% to yield 12%. At the end of year 1, ABC company is having trouble meeting its obligations. Further, ABC failed to pay the interest on the loan during the year. The company forecasts the following collections. So December 31, year 3, December 31, year 5, December 31, year 6. As of December 31, year 1, the current market rate is 11%. What is the loan impairment? What is the loan impairment? Okay, so we need to compute for our loan impairment. So to compute on our loan impairment, we need to get for the carrying amount of the loan, which is equal to your book value of the loan plus accrued interest receivable. And then we need to compute also for the amount of our recoverable amount, that is the present value of future cash flows. So let's compute first for the carrying amount of the loan as of December 31, year 1. So kindly compute for the carrying amount of the loan as of December 31, year 1. Okay, so the carrying amount of the loan is equal to 5,330,994.90. That is equal to the book value of the loan, which is 4,830,994.90, and the accrued interest receivable of 500,000. We proceed now to the recoverable amount of the loan. So as of December 31, year 1, as of December 31, year 1, we have the following cash flows. December 31, year 3, December 31, year 5, and December 31, year 6. So from December 31, year 1 to December 31, year 3, how many periods? Year 2, year 3, 2 periods. Next, year 2, year 3, year 4, year 5, 4 periods. Next, year 2, year 3, year 4, year 5, year 6, 5 periods. 5 periods. So we are now ready to compute for the present value. So we use PV of 1 and given naman na 2, 4, and 5, and I is equal to, so what is our original effective interest rate? We go back to the problem. Bearing an interest of 10% to yield 12%. So to yield 12% here is the original effective interest rate. It is the original effective interest rate. So our interest rate here is 12%. Okay, so we compute for the values. So this is 4,052,986.60. 4,052,986.60 or 0.57 kung gusto niyo na uh, tamang tawag dito, decimal points. So 0.57 yan or 0.60. So did you get the same? 4,052,986.60. So after getting the carrying amount of the loan and the recoverable amount of the loan, we are now ready to compute for our impairment loss. So what is the amount of our impairment loss? So that is the difference between the carrying amount and the recoverable amount. So our carrying amount is equal to 5,330,994.90, and our recoverable amount is equal to 4,052,986.60. So what will be our amount of impairment loss? 5,330, 994.90 less 4,052,986.60, we will get 1,278,008.30. And we said this is a portion of your interest receivable and your loan itself. So how much is for your interest receivable? That is the accrued interest receivable of 500,000. And excess is for the loan. So our loan is 778,008.30. So how should we record it? So once, guys, that you learn that your total impairment loss is composed of the uh, impairment of the interest and the impairment over the loan, in case, guys, the question is, what is the amount of impairment loss? Your answer should only be 1278008.30. Under the question that, what is the amount of the impairment loss on the loan? Or what is the loan impairment loss? So if ever the question is loan impairment loss only, this will be your answer. The portion of the impairment loss allocated to the loan. So how do we make your entry here? Since we already separated the amount of your impairment loss, it will be easily recorded as follows. So either direct or allowance. So under direct, we just debit impairment loss, and then we credit accrued interest receivable amounting to 500,000 pala yung ating accrued interest receivable. And then, since direct siya, we will credit it to the balance of our loan. So, loan receivable, 778,008.30. Next, under direct, again, we just record the amount of our impairment directly to the loan. If under the allowance, instead of crediting the loan, we credit allowance for impairment loss. So our entry is debit to impairment loss, 1278008.30. We credit accrued interest receivable of 500,000, and we credit allowance for impairment loss of 778,008.30. 778,008.30. Okay? So again, guys, if ever the question is, what is the total amount of the impairment loss? Ang sagot, 1278008.30. Pag ang tinanong, what is the loan impairment loss? Ang sagot lang, 778,008.30. Because on the portion of the impairment loss, there is an accrued interest receivable. Sir, what if there is no accrued interest receivable? So if there is no accrued interest receivable, meaning the computed impairment loss is equal to the loan impairment loss. So, assuming, guys, dito sa sample natin, di ba? Kasi hindi siya nakapagbayad ng interest. Did not pay the interest. So there is a failure to pay the interest. Since there is a failure to pay, we have an accrued interest receivable. But what if in this problem, we collected the accrued interest receivable? We collected the accrued interest receivable. What will happen? If we computed or collected the accrued interest receivable, what happens here is the computed impairment loss. This is the impairment loss. That is also the loan impairment loss, because the interest receivable now portion is 0. The loan impairment loss now is at the whole amount of 1278008.30. Okay? Clear? So after computing our impairment loss, we go now to the subsequent measurement of loan receivable after impairment. Subsequent measurement of your loan receivable after impairment. Okay, so we already know that as of December 31, year 1, the carrying amount of our loan is equal to 4,830,994.90. Okay? So as of December 31, year 1, the carrying amount of our loan is 4,830,994.90. So that is the CA, or the book value. We deduct the allowance for impairment loss, or the impairment loss attributable to the loan, amounting to 778,008.30. What will be our carrying amount after impairment? The carrying amount after impairment should equal the present value of cash flows. The carrying amount after impairment must equal the present value of cash flows. So let's check if ever it is equal. So 4,830,994.90 less 778,008.30 will provide you 4,052,000 986.60. 4,052,986.60. So kung papansin niyo, ayan siya, the same siya. Okay? So guys, subsequent measurement of loan receivable after impairment, it is equal to the present value of cash flows. Present value of cash flows. So pag tinanong dun sa problem, what is now the carrying amount of the loan as of December 31, year 1? Your answer should be equal to the present value of cash flows. Your answer should be equal to the present value of cash flows. Now, how about subsequent measurement of the impaired loan? Subsequent measurement of your impaired loan. So subsequent to date of impairment. Subsequent to date of impairment. So what do we mean by subsequent to date of impairment? If our impairment date is December 31, year 1, we should learn how should we subsequently measure it after December 31, year 1. So how will we measure the loan after December 31, year 1? So to measure the loan after December 31, year 1, here are the rules. So the present value of cash flows will be now your carrying amount of the loan. And then the present value of cash flows will be amortized over the collection period. Over the collection period. Okay, so we have here December 31, year 1, December 31, year 2, December 31, year 3, December 31, year 4, December 31, year 5, and then December 31, year 6. So what is the PV of CF or the carrying amount of the loan? So, di ba, andito tayo yung interest, receive, interest, income, and then we have here your collections or principal repayment, and then we have your amortization, and then we have your carrying amount. Carrying amount. Okay. Or baliktarin natin, interest, income, interest, receive. Para less interest income, less interest received, less collection or prepayment, we have your amortization. So what is the carrying amount as of December 31, year 1? 4,052,986.60. Now, what is the cash flows or what is the stream of cash flows under our problem? So, paste lang natin dito para alam pa rin natin yung ating stream of cash flows. So, on December 31, year 3, our stream of cash flow is 2 million. So, we have here a collection of 2 million. December 31, year 5, 1.5 million. And then we have your December 31, year 6, still 1.5 million. So do we have any interest received? As you can see, guys, in the computation of our present value factors, we base it purely to the collections of the principal. Therefore, we do not have any interest received for the 5 periods. Okay. Now, what is the interest income? So we have 4052, 986.6 multiplied by 0.12. So this is 12% again, carrying amount times 12%. We have 486,358.39. No collection or prepayment. Our amortization is positive, so we need to add this value. So the value now, as of December 31, year 2, is 4,539,344.99. Year 3 interest is 544,721. 544,721.40. And we have the collection of 2 million. So 2 million less that amount. We have here 1,455,278.60. That will decrease our amount. So 4,539,349.99 less the value. We will have 3,000,000 0.384071.39. And then we have another interest. We have 370,088.57. Okay. And so our amortization is equal to 370,088.57. So our carrying amount now is equal to 3,454,159.96. Next, we will deduct again, we will get the interest. So 414,499.19. And then we have e-collection or amortization equal to bakit hindi na siya nag-equal? Wait nga. %, so 4,052,986.60 times 12%, 48638,358.39. So 4,052,986 times 1.12 times 1.12 less 2 million times 1.12 times 1.12 less 1.5 times 1.12 less 1.5. Kinompute nyo ba yung PV of cash flows? Nakuha nyo rin ba yung 4,052,986.60? Baka mali yung ating PV.
Sir, iba po yung nako-compute namin, sir.
Sir,
Ano nako-compute nyo?
Sir,
3,398,000 po.
Sige, compute ko lang. 2 million. Sige, wait lang ah. -4, -5. 3,398,805.16. Oh, yun. Okay. So, sorry, mali pala yung na-compute nating value. This is 3,398,805.16. So, kung 3,398 to... Ano?
Sir, kaya nagpapanik ulit kami dito eh, paano nakuha yung 4 million.
Okay.
Kanina pa namin.
1,932,189.74 less 500,000. This will give us 1,432,189.74. Okay? So, we will just change the amounts of our entry. So, our impairment loss, tama ba yung 1,932? Tama ba yung pagka-deduct ko? Tama ba? Tignan nyo nga kung tama yung pagka-deduct. Para tama yung mga amounts natin. 1,932,189.74. Tama siya?
Yes, sir.
Okay.
Yes, sir.
So, balik tayo dito. Ba yan? Ang dami ko nang kinompute. Okay lang ba guys, nabilisan ko na yung pag-compute dito sa carrying amount? Nagets naman natin kanina kung paano yung subsequent measurement after the date of impairment, di ba? So, subsequent measurement, subsequent to date of impairment. First, you measure the carrying amount of the loan using the present value of cash flows because, again, it is already impaired based on our journal entry. And on the journal entry, there will be a decrease on the carrying amount of the loan, which is equal to the impairment loss attributable to the loan. Next, we subsequently measure the present value of cash flows using amortized cost over the collection period. So if our carrying amount is equal to 3,398,805.16, and our interest received is always 0 because our principal is always at 3,398. Our present value of cash flows is based only on principal and nothing on interest, so zero yan. And then our collections, i-plot lang natin 2 million on year 3, 1.5 on year 5, and then 1.5 on year 6. So we get for the present value. Okay lang ba nabilisan ko na yung pag-compute? So we have here 3398, 805.16, and then we have this value 3806661.78, and then we have 2,263,461.19, and then 2,535,076.54, and then we have 1,339,285.72, and then we have 0. Okay. Ayan, 0. So here, ganun pa rin. Yun nga lang, nag-iba na yung ating carrying amount. Hindi na yung original carrying amount, pero based on the carrying amount of our loan that is on the impaired value or the recoverable amount. So we use 3398805.16, tapos i-amortize natin. Kayo na bahala mag-compute dito guys sa value na yan. Ayan. So just multiply lang naman the carrying amount to your 12% effective interest rate. Now, before we end past 39, I need to emphasize this, another topic on your past 39 impairment, that is your reversal of impairment loss. Reversal of impairment loss, or the recovery of your debtor as to the loan. So what is this reversal of impairment loss? So what do we mean by this reversal of impairment loss? So when we say reversal of impairment loss, the future cash flows of the loan increase subsequent to date of impairment. Subsequent to date of impairment. So for example, guys, our date of impairment here is December 31, year 1, di ba? Tapos, subsequently measure na natin yan ng amortized cost until December 31, year 6. So what if in between that date, so let's say during this date, there is an increase on the future cash flows, increase in future cash flows. Therefore, we should reverse the impairment loss. We should reverse the impairment loss. So again, ano tong kwento ng reversal of impairment loss? There is a reversal of impairment loss from the time of impairment up to the time of the last day of collections or the last day of amortization, if in between those dates there will be an increase in future cash flows, which now warrants reversal of the impairment loss. So there is an increased value of the loan subsequent to date of impairment. So how do we reverse your impairment loss? How do we reverse your impairment loss? So the reversal of impairment loss should not be higher than the carrying amount, assuming there is no impairment. Assuming there is no impairment. Okay, so let's say on December 31, year 2, December 31, year 2, the present value of cash flows, is equal to 4.9 million. Is equal to 4.9 million. And the present value of cash flows on December 31, year 2 is equal to 4.7 million. 4.7 million. So how much is the amount of our gain on reversal of impairment? Gain on reversal of impairment. Again, anong meron sa reversal of impairment loss? So, di ba, after the date of impairment. So, date of impairment, up to the last day of collection based on the future cash flows. In between those dates, subsequent to date of impairment, there is an increase in future cash flows. So it warrants a reversal of the impairment loss. Up to what amount? Sabi natin, reversal should not be higher than the carrying amount assuming there is no impairment. So what do we do here? We compare the current carrying amount after impairment, the uh, carrying amount assuming no impairment, and the future cash flows. Whichever is higher, sorry, ba't napunta siya dun? Whichever is higher is the value of the loan. Okay. Tapos yung value of the loan na makocompute mo dito na higher, i-deduct mo yung current carrying amount after impairment. This is the reversal. Okay? Ito na yung gain on reversal mo. Ulitin natin. So on the gain on reversal of impairment, you get the higher between the current carrying amount after impairment. Na-discuss na natin yan, na-compute na rin natin. Tapos, yung carrying amount assuming no impairment. Tapos, yung future cash flows. So whichever is higher here, that is the value of the loan. The value of the loan now, less the current carrying amount after impairment, is the amount of the reversal or the gain. Okay. Sir, ano tong future cash flows? Yan yung present value of future cash flows. Present value of future cash flows. So gamitin natin dito, example 1 and example 2. Computein natin yung current carrying amount. Ano yung date natin ngayon? December 31, year 2. December 31, year 2. Balik tayo dun sa ating solution kanina. Anong value natin ng December 31, year 2? Ito siya. So yan yung current carrying amount after impairment. 3806667 or 661.78. I'm sorry, ang pangit ng sulat ko. 3806661.78. 3806661.78. And then, we have your carrying amount assuming no impairment. So what is our carrying amount assuming no impairment? So we have here 5 million, 10%. Original effective interest rate is 12%. Issued on January 1, year 1. Tama? And then, we get now the value as of, this is 3 years, tama? N is equal to 3. So what is the value as of now? December 31, year 2. So we compute. So the current value now is 4,910,714.29. Palitan nga natin to. Gawin natin 4,950. Okay. So 4,910,714.29. So balik tayo dito para hindi na kayo malito kung paano naman nakuha yung 4,910. 'Di ba? Ito yung book value niya, 4,830,994.90, tama? 4,830,994.90. I-amortize nyo yan ng 1 year. I-amortize nyo yan ng 1 year para magiging 4,910,714.29 na siya. So kumbaga, dun sa ating facts, ang magiging basis mo dito is 5 million, I is equal to 12%, N is equal to 1. This is for principal. For the interest, 500,000, I is equal to 12%, N is equal to 1. Okay. 1 year na lang kasi December 31, year 2, until December 31, year 3 na lang yan. Okay, guys? Ayan, sundan ba? Okay. Next, we compute for the future cash flows. So, Since na-compute na natin yung current carrying amount after impairment at saka yung carrying amount assuming no impairment, madali na lang tong reversal natin. Okay, ganito ang gagawin natin. Doon muna tayo sa example number 1. Okay, what is our example number 1? Our future cash flows, the present value of future cash flows is 4,950,000. Okay, we list it down. What is the current carrying amount? Our current carrying amount is 3806,661.78. What is the carrying amount assuming no impairment? Assuming no impairment. Our value is 4,910,714.29. Next, what is the present value of future cash flows? 4,950, which is higher. Whichever is higher is the value of the loan. So the value of the loan here is 4,950,000. That is the present value of future cash flows. But take note, the reversal should not be higher than the carrying amount, assuming there is no impairment. The reversal should not be higher than the carrying amount, assuming there is no impairment. So what is the carrying amount, assuming there is no impairment? 4,910,714.29. So ang gagamitin mo na lang, 4,910,714.29. So 4,910,714.29, this is the value of the loan now. 4,910,714.29. You deduct the carrying amount or the current carrying amount of 3806,714. 3806,661.78. Ayan. So what is our reversal? What is our reversal? Our reversal is equal to 4,910,714.29 less 3806,661.78. We have 1,104,052.51. 1,104,052.51. So how will we record the reversal of impairment loss? So how should we record the reversal for impairment loss? If that is under direct method, idiretso mo siya sa loan receivable. Tapos, gain on reversal of impairment loss. Pero pagka ang ginamit mo initially ay allowance method, idiretso mo yan sa AFIL, tapos gain on reversal of impairment loss. 1,104,052.51. So in short guys, pag pinagsama natin tong rules na to na reversal should not be higher than the carrying amount assuming there is no impairment, and whichever is the value of the loan, ang ginagawa lang talaga is to compare the present value of future cash flows and also the carrying amount assuming no impairment. Higher, yun yung kukunin mo. Ay, lower, yun yung kukunin mo. Lower, yun yung kukunin mo. Less the carrying amount right now, that is the reversal. Okay. So, isolve natin gamit na itong rule na to. Huwag natin gamitin yung buong rule ng ating standard. Ang sabi kasi, i-compare mo yung tatlo, kunin mo yung higher. Tapos, sabihin ulit na reversal should not be higher than the carrying amount assuming there is no impairment. Diba? Ang weird lang. So, kung ang gagamitin na natin ito, baka mas madali nating intindihin, di ba? So, present value of future cash flows, carrying amount assuming no impairment, whichever is lower is the carrying amount. So, what is the present value of future cash flows? The present value of future cash flows is equal to 4,950,000. And then, we have your carrying amount assuming no impairment of carrying amount assuming no impairment amounting to 4,910,714.29. Ang makukuha mong lower dyan, the lower is 4,910,714.29. Ibawas daw natin yung current carrying amount, which is 3806,661.78. Makukuha pa rin natin yung 1,104 052.51. Makukuha pa rin natin yung 1104,052.51. So, the same lang siya. So, instead na itatak natin sa isip natin na you get the higher amount between the present value of future cash flows and the carrying amount assuming no impairment, but the reversal should not increase as to the carrying amount assuming there is no impairment. So, medyo mahaba kasi yon. So, ito na lang yung iintindihin natin. Kunin pala natin yung lower. Ang ibig sabihin pala ng standard ay kunin daw natin yung lower ng present value of future cash flows at saka yung carrying amount assuming no impairment. Tapos, i-deduct natin yung current carrying amount to get for the reversal. Okay? So, maybe nalito kayo dun sa mga sinasabi ng libro, but then, eto na lang yung gagamitin nating rules. Okay? So, just get the lower between the present value of future cash flows and the carrying amount assuming no impairment. You deduct the carrying amount. That is the amount of our reversal. Sir, paano namin masasabi na may reversal? Madali lang, guys. Kasi sasabihin naman ng tanong, what is the gain on reversal of impairment loss? Pagka ganun yung tanong, eto na yung gagamitin ninyo. Ayan, gets? So, hindi naman na natin kailangan titignan muna na may tumaas yung present value of future cash flows. Ginagamit kasi nila to, etong tatlo, yan, asan na yung tatlo? Ayan. Ginagamit nila tong tatlo to determine kung meron talagang reversal. Pag tumaas talaga siya, kaya nga whichever is higher, tapos ililimit mo uli siya. Pero, since alam naman na natin na yung tanong talaga is reversal, edi bakit mo pagagawin yung mahabang process? Just use this one. Okay? We proceed to the second example. Our second example is the present value of cash flows is 4.7 million. Our example, number 2, 4.7 million. So, our present value of future cash flows is 4.7 million. And then our carrying amount, assuming no impairment, is 4,910,714.29. So this is number 1, and this is number 2. So what is the lower? 4.7 million. We deduct 3,806, 661.78. Then our reversal of impairment is equal to 4.7 less 3,806, 661.78. 893,338.22. 893,338.22. So how will we record that? If we use the direct method initially, we debit loan receivable, we credit gain on reversal of impairment loss. And then if ever we use your allowance method, what is our entry again? We debit allowance for impairment loss, and then we have your gain on reversal of impairment loss amounting to 893,338.22. 893,338.22. Okay? So, ulitin natin yung rules sa past 39. Balikan natin. So, under past 39, when can we say that there is impairment? There is impairment if the carrying amount is greater than the recoverable amount. What do we mean by carrying amount again? The carrying amount is equal to the book value of the loan receivable plus any accrued interest receivable. How about our recoverable amount? The recoverable amount is equal to your present value of future cash flows discounted using the original effective interest rate. We go now to the subsequent measurement after impairment. Subsequent measurement after impairment. So at the date of impairment, what is the value of the loan? So the loan is equal to the future cash flows or the present value of future cash flows. So in short, we will recognize the loan at the recoverable amount. We will recognize the loan at the recoverable amount. How about after the date of impairment? After the date of impairment, how should we measure it? We measure it based on amortized cost using the amount of future cash flows. So we will amortize it until we collect based on your future cash flows. So nagbigay naman na tayo ng example niyan. Also, on your subsequent measurement after impairment, there is a possibility of reversal. There is a possibility of reversal. And under your reversal, what did we say? Under your reversal, we can reverse the impairment based on this rule alone. So our rule is we get first for the present value of future cash flows at the time of reversal, and then we compare that to the carrying amount assuming no impairment, and then we get the lower value less the carrying amount or the current carrying amount based on the impaired value. Then we have your gain on reversal. And we said there are two methods of recording impairment. And what are those methods? We have your direct and we have your allowance. So at the date of impairment, how do we record your direct? To record your direct, we debit impairment loss, we credit loan receivable, and then accrued interest receivable. While for your allowance, we debit impairment loss, credit allowance for impairment loss, and accrued interest receivable. Take note, guys, that your impairment loss consists of two parts or two items. That is the loss on loan itself and the loss on the interest. Therefore, guys, pag tinanong kayo, impairment loss is composed of the loss on the interest and the loss on the loan. Okay? And also, in your methods of recording, we can also record the reversal. In your reversal, how do we record it in your direct? We just debit loan receivable and then we credit your gain on reversal of impairment loss. While for your allowance, we debit allowance for impairment loss, and we credit again a gain on reversal of impairment loss. Okay? So that's it for past 39, accounting for impairment of loans.